What's up, everyone? Today we're going to be going over the January 2025 top ops dissected. January was a pretty active month, probably not as good as some of the ones in 2024, but overall a lot of good stuff still, especially in the quantum names. In my opinion, the best intraday op was probably some of the stuff in Fannie Mae. And then I think the best swing op was probably some of the quantum names. So we're going to get into that. But first, the ticker we're going to start off with is QNCCF, a little OTC stock that had really run up from about 10 cents, and talk about, a potential nice breakout is even if you buy this and trail this using prior bar lows, like look how many days this held in a row. This was the day it broke and the day we're going to be analyzing. So this daily chart is the context, and essentially what we did is we opened strong, we made a move off the open, then we collapsed towards the middle of the day, and we're gonna dissect that now in detail. So we're going to jump to 1-2, keeping that daily in mind. So this is what it looked like that day. The moving average is down at 45 cents, which I will bring relevancy to in a little bit. So like I said, we had been strong many days in a row, very run up and everything. And so what ends up happening is we end up kind of just doing a nice drive through midday, but then we really crack hard. So a couple places to enter. I mean, first you can potentially do lows of the day, which I don't particularly love, given this ran. This had already cracked a far amount first. So I don't necessarily love the short anywhere, because even by the time we break prior bar lows on the daily, we're talking way down here after it's really melted a while. But what I do want to point out is the long. We make a tremendous move and essentially lose 66% plus of the value of the company in about a half hour, even less. Sorry, I mean, this is like, we're talking 15 minutes, 10 minutes. We hold prior bar highs the whole time. So as we start to get towards 65 cents, I mean, it's pretty damn tempting at this point, but like my true sweet spot where I would have been going nuts is that 45-cent area on the daily. If this went to 45 cents, like, oh my God, just give me like infinity shares and I'll just accept wherever this ends up going. This is just such an enormous move to make in one leg that, especially if we went down towards this 45-cent area, the probability of a bounce and an asymmetric bounce versus your risk is just so many multiples. Nevertheless, I'd still probably have been starting to buy into this front side, because again, even when you're at the high 60s, mid-high 60s, the break of prior bar isn't until all the way up there, like 20 cents away. Even as we're going towards here, your risk is just becoming so minuscule at this point. So I would definitely have been buying into this. Then the true break of trend occurs right around 80 cents, and that's where you can add. And then just traditional trail of prior bar lows. This is classic right side of the V, really big volume capitulation there. And so then anything you make on this leg is just beautiful. Given we came from a $1.60 to a $1.70, I think it's reasonable to consider holding some of this. Even bigger picture, like I don't think it's so crazy that this bounced above $1.10. And if you do sell, I don't think it's not that I love it. It's not unreasonable to buy this break of $1.10 there. I think that's totally reasonable to catch like another little leg there, but yeah, no major strong views. Overall, this is just an example of what I would consider like a pretty damn easy money trade. You're doing a lot of volume, so you can get a decent amount of stock on something like this. Very low priced, very low risk as that falls like that. Now we're gonna jump to Fannie Mae. So this had a couple opportunities. First things first, we talked about this last month in December, but then the other thing that I really want to point out, and there's so many ways to trade this at this point, but like this breakout on 1-3, so essentially we make this huge move on the Bill Ackman tweet, him being super bullish. This isn't quite an inside bar, but it's the same in concept. This definitely is an inside bar. And so I think it's totally reasonable after, like, this didn't retrace one bit. We're holding up in like the upper decile of the move. So then I wouldn't be so opposed of buying that break of prior bar highs on this, or just when we break out above this range, call it like 365-ish or so. All of that makes for a really, really, really awesome long on 1-3. So then it's kind of like choose your own adventure. If you just want to catch this intraday, that's great. We do close top tick very, very strong. And what I think is so interesting is this volume was enormous. Yes, the Bill Ackman tweet came out kind of later in the day, but this is still very encouraging how much volume we did. Down here, we did a little bit more on some of the prior days, but this is still really great. Especially to see that breakout. So I do think it's reasonable to swing this using the traditional stop of prior bar lows or just catching that intraday breakout. Again, this is just really nice daily pattern in a stock that's just very, very in play for a nice intraday trade. And again, the ticker is super liquid. I mean, we did almost 50 million shares that day. The other thing I do want to point out, I didn't think it was so great. There wasn't so much of a setup intraday, but I do think this becomes an interesting short on 1-15, right? Because the initial news happened back here, 12-30. We've then gone up essentially, 200% from there and tripled. That's a pretty damn big move, and it's really far away from this breakout, and it's many days kind of going up in a row into that, 1, 2, 3, really, really big bar. So I would be looking for an exhaustion-esque type play here. We're going to analyze the intraday real quick, but what you're going to find is there wasn't that much of a setup to sink your teeth into. And I mean, I found it was pretty damn hard to get any shares at all. We kind of just open around here. And once we start to crack, it's just it's gone. Maybe you can short that bounce and give it to highs or something. I don't think that's the worst idea. But then shorting some of these rollovers, we're kind of covering a lot of ground. I don't think any of these rollover shorts, whether it's here, or there, are that bad, but I don't love them either. Again, you can kind of short the pops just given this daily. But yeah, there was nothing I so love to sink my teeth into on that one. Now we're gonna go to this Nari. So this was on 1-6. This was an M&A headline. Again, I do suspect M&A is going to really pick up with this Trump administration, much less regulation. This was a med device co, ended up getting bought by Stryker. But the headline was a Reuters headline that Stryker is in talks to pursue the company. Of course, very hard to get initial stock. That being said, if you can get anything, this did hold prior bar lows just beautifully. Then, you always want to be so on top of these headlines, but sure enough, at the close, comes out, it's official, deals definitive. Stryker to buy the company for $80. So what does that mean? Any print above 80 was essentially a amazing short. It's hard to say what the discount will be. Of course, there's going to be some time value of money. You can get a discount due to any potential dividends or anything. You can get a discount due to antitrust risk, any sort of various reasons. I would guess a buck is a dollar discount to 80 is pretty fair. So where is good to chase on that? I mean, honestly, probably anything 75 or below is probably worth it, just because, again, this is definitive and you've got a deal price. So kind of the 2-1 for that. Nothing so crazy. I know liquidity is not so great. I mean, the after hours is what? I don't know. A couple 100,000. That's nothing that crazy. That was Nari. The other big headline from this day was Fubo. So for context, Fubo used to be a way higher price stock. This stock was pretty beaten down to shit. If we go way back, this stock actually had quite the glorious run. And of course has been, beat to shit now for quite some time. What happens is pre-market on this 1-6, let me go back now that we see the daily. Again, I always try and get the daily context to really know what we're dealing with. Pre-market, early in the morning, headline comes out. The headlines were super complicated, but essentially Fubo was to combine the live TV streaming business with Disney's Hulu Plus. There was going to be some really big cash payment, especially as a percent of this ticker's market cap. Disney was to own 70% of the entity. So there was a lot of complicated deal terms, a lot of complicated headlines. But look, at the end of the day, this is a super beaten down to shit stock, and it's getting a big deal with Disney. If gun to your head, you almost want to 90% side with the fact that this is going to be very good for them. And especially once we start trending, that's all great. The volume that we started to do was pretty damn good. Very high volume on some of these bars, especially versus the volume we were doing. Then the other thing is this break of 250. That is just such total money. You can trail that with prior bar lows. I don't think this quite stops you out. Nope. Which gets you a nice leg there. But I just can't stress how good of a setup this is. Like, it's a beat into shit stock. We consolidate to the moving average. We hold really tight on very high volume, then boom, and just off to the races. The other thing too is, like, I don't want to do so much around here while we're in no man's land. But then we consolidate really, really well at highs into the close. Like, this is the type of thing where we've done such epic volume. Minus the open, we really didn't pull back much. This is totally a swing candidate for me, given the volume and the strong close. So look, it wasn't some mega home run. Like, we did run after hours by the time we opened the next day. It's not that crazy. But I do think, like, I mean, look how epic the volume we did was. This is the biggest bar, I'm sure, if we go back really, really, really far as that volume. So yeah, I do think this overnight was very much worthwhile, especially given the range on this thing. Overall, that was a really, really big headline, an awesome setup. And the other thing, like, stocks were running pretty well into that. You know, the lower market cap companies and lower price stocks were doing well. So that also matters. Now, probably the biggest headline of the month. Actually, that's not true. I'm going to immediately take that back. But what ended up happening on 1-7, this was funny because I was actually speaking to a trading firm when this was going on. Let me go to 1-7. Obviously, for context, the quantum stocks had been going absolutely apeshit. We spoke about them in December quite a bit. So these tickers literally have no earnings. They have no chance of earnings for a really, really long time. It's all just pretty much Fugazi built on air. But again, the technicals always win. What ends up happening though is Jensen Huang is at his conference. I think it was the CES conference. And he ends up talking in his speech and saying that quantum computing, I can't remember the exact quote, but something like quantum computing is like 20 to 30 years off. The one thing that I'm going to end up talking about as a theme is what I would like to call a thesis buster. So if you asked me the main stuff that's happened so far in 2025, and I'm recording this in kind of early mid-Feb, the biggest opportunities by far are what I would call thesis buster headlines. And so essentially Jensen Huang totally shat on the whole quantum computing space. That was one of the biggest opportunities. I'm next after this in a couple more tickers going to discuss the DeepSeek headline, which was a thesis buster for NVIDIA. Then in February, which I'll discuss, you know, in the next video, there was the NVIDIA sale of their SOUN and their SERV stake, which is a thesis buster because that's the whole reason those stocks were up to begin with. When that happens, these can go so much further than you think. This even, like, the analogy I always give is like when Bed Bath & Beyond had that stake and was going apeshit because of Ryan Cohen ownership, then it turns out Ryan Cohen owns all those shares. You got to be so careful buying into that because that can retrace so much. The whole thesis of why the stock was up is ruined and debunked. So especially for this one, when the lord of all things tech and AI these days, Jensen Huang, says quantum computing is 20 to 30 years away, talk about putting the kibosh on this. Oh my God. Because again, this is all just trading on air. So look, a lot of ways to trade it. You can use prior bar highs. For this though, any big thesis buster headline like that, you really want to have some imagination. And of course, this is going to take a lot of time to get incorporated. And the other thing too, I would argue, is this definitely meets the CNBC heuristic of, oh my God, this headline is going to be big. Everything Jensen Huang says is huge. And so him just shitting on quantum computing, really, 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 really big deal. So, I mean, all these stocks, like, I don't think it matters too much the ticker. Some are more garbage than others. But whether it's the QBTS, whether it's a QBT, I mean, IonQ is kind of one of the bigger ones. So I'd much rather go for one of the shittier, more bullshittier ones like the QBTS. The RGTI was one of the most run up on a percentage basis. And so now here's the thing I want to bring up. You can definitely consider a swing on this. Just most of all, the point I want to make is you got to be so careful buying into this. I don't know why, but a lot of traders in my sphere were like overly obsessed with like buying into this. And it's like, dude, like the stock literally went from $1 to 20. So you got to think about this in terms of the range, right? This is up from $1 to $20 on total Fugazi. Then Jensen Huang just shits on the whole thesis. When we were still at 16 after hours, we're in the upper quartile of the range still. When the next day we trade all around here, we're just in the middle of the range. If anything, we're still a little bit probably where we open, we're still above 50% of the range. So like for me to be interested in a long, I need us to get way down here, right? So many people would still argue, oh wait, this stock should have never been at $12 to begin with. So it's like so many people haven't been able to get their shorts because like you don't want to fight it. You don't want to fight it. Borrow's super hard. You don't want to get blown out if this does another leg. Does it go 20, 30, 40? Like $30 or $40 or is just as stupid as $20. So you got to be so careful shorting this, you know? And I was careful shorting this, right? But then when you get that game-changing headline, it's like, oh my God, like you can't, unless you short it after hours, like the real people positioning in this, they don't have the chance to get all the volume they want, or they're off the desk at that point, right? And so you got to be so careful buying mid-range on this. You can't be thinking that way. Like huge day one breaking news. So I don't understand the argument of why people were so keen to buy this. But then, right, you know, we hold trailing bar highs. This bar though, now we're getting interesting. Now you want to start potentially buying into this, right? Like now we're in kind of the bottom third, approaching the bottom quartile of the range. So like you could see this do some type of reflexive bounce where it's like, okay, all the people that were short, guess what? You just made 75% and you're paying high borrow in a couple days. Like, you know, you made 75% in a couple days. That's worthwhile. If you like the stock at 22 or 20 or whatever, well, guess what? Now it's $6. Now you're talking. Like we are down 75% or so. So that's a little bit high, but we are down a huge chunk in a couple days. Now we're talking. Now you're going to be long bias. And when we break that trend, you can still consider a long there. I don't quite love it. You know, I think you mostly want to be buying into this one for light size. But so, I mean, you've got the short, you've got the long, all of that is pretty damn interesting. And I'm using Rigetti, but this concept applies to all of them. I don't know why this RGTI just happened to be my preferred ticker of choice. Oh, what I will say, by the way, if I have to buy into any of these, I'd way rather buy into the IONQ, just because I consider this almost like the most legit mega cap of them. Like, and notice how this didn't keep on melting just because this was the more legit of them and the biggest market cap. So stock selection does kind of matter, but I do, you know, that's if I had to buy into something on day one. But what I do want though, at least over multiple days, is a stock that's most stretched to the downside, right? This rubber band was all the way pulled to the upside, then boom, we collapsed and we're stretching to the downside 3 days in a row, and some of these other stocks aren't falling through that at all. So RGTI was the best for the swing higher, but if I had to buy one stock on day one, I'd rather buy INOQ than these kind of shitty, you know, crappy ones. So that was super fascinating. Amazing op. Then we're gonna go to FTAI. So this was the Muddy Waters headline. Muddy Waters is a short seller that's come up in some of these videos occasionally. One of the most esteemed, famous short sellers, especially for fraud. And sure enough, he comes out on FTAI and he says that there's misleading financials, you know, some potential fraud. And so if you can get First Prince to short that of course is amazing. But what I would say is any of these rollovers, you know, this one's a little bit looser, but this rollover, these bars are so tight. And even here where we kind of go inside bar, inside bar, inside bar, then we break, any of these are super interesting. Even this, like it's not as nice as these, and we've gone multiple legs, but it's still not the worst. And again, at this point, we're talking fourth leg. So at this point, I'm probably starting to become more long biased. We're down over, 30+%. We've done multiple legs. Then what ends up happening is we get a big volume capitulation. This is the what? You could almost call this leg 1, leg 2, leg 3, leg 4, leg 5. Call it, the 4th to 5th leg. At that point, 4 to 5 legs in a row, big volume capitulation. This was the biggest leg yet by far. So I do think it's very worth considering a long once we turn. Typical trailing stop, prior bar lows. That's like, I don't love this trade, right? You are kind of fighting the news and everything. This wasn't the most crazy blowout, but at least, I think the bigger concept is it's fourth to fifth leg. We've got huge volume. The stock's down a ton. If we turn, this can make a decent bounce. Again, this wasn't quite the flush out I want to see, but had this really gone further, that's more so the point I'm making. Nothing so crazy there, but worth discussing. Then we're going to jump to Oracle. This was on the 21st. Like, Trump has already led to just so many insane headlines. And so here's what happens. I believe that was in around his press conference or whatever, AI pact with OpenAI, SoftBank, and Oracle. They floated a $100 billion number. That is a massive, massive AI partnership. Of course, it can't buy, SoftBank really, it can't buy OpenAI. So Oracle's the move. This didn't even move that fast. And trailing prior bar lows works pretty great. Amazing volume on this thing. And then what ends up happening is we don't pull back at all. So the volume on this was incredible. We don't pull back whatsoever. We close top tick. This is another thing where, like, talk about CNBC heuristic. This is going to be all over the news again. Massive, massive Trump deal. It's AI. It's a hot topic. We close top tick on massive volume. Totally reasonable to consider this for an overnight. This overnight did end up working very, very well. Huge gap on that. So, okay, that is another breaking news headline. Now we're going to get to the 1-24 DeepSeek headline. So I was traveling this day. So look, it's hard for me to, you can always Monday morning quarterback and everything else. And so here's what happened. So I think it was essentially overnight into that Friday, DeepSeek came out with, hey, breaking news, we built this model. It's way more cost and energy and chip efficient than people ever imagined. Even by early morning, you have people like Mark Andreessen tweeting about it. You have CNBC articles by 8 a.m. about it. So like, this headline was already big, but then the question of like, what are the implications? And so let's kind of use NVIDIA as the poster child. What's so interesting about this was NVIDIA on 1-24 was up on, I think it was maybe Meta had CapEx. I can't quite recall off my head. So look, I'm not an AI expert. A lot of this stuff is still above my pay grade, but there were people out there that were like, oh my God, this is really big news. I mean, Mark Andreessen was tweeting that this is holy shit news. There were a lot of big takes on Twitter, how big of news this was. And my personal belief is people started connecting the dots. Props to Investors Underground. There was some dude, I don't remember his username, sorry to not give you cred, but some dude in the channel was like, oh my God, this is fucking huge, buy puts, this is fucking big deal. So like, look, some of these headlines are super complicated, but sometimes that complexity of like, oh my God, is this legit? What are the carry-on effects? Like, how big of a deal is this? That complexity and that difficulty handicapping some of this is also what leads to opportunity if you have expertise there. I don't. It's really hard for me to Monday morning quarterback. But what I will say is NVIDIA, was strong. Then we fail hard off the open. Then the whole day, not just NVIDIA, but also just the Qs and tech in general was really, really, really weak into the close. If you understand this stuff, if you have a pod member that understands this stuff, if you're part of a community that understands this stuff, that's where you can be really, really, really big deal type moves. Can I say you should have bought puts? Who the hell really knows? The bigger thing that I think is important is like, look, I think probably 99% of traders or more probably missed this, but it was clear that especially by the end of the day, this was kind of all everyone was talking about. Then it just kept on reverberating over the weekend and people started to fully grasp it. And so I think like, look, it's okay to miss this stuff, but what you should do is say, hey, how could I better improve my process? Like, what was I thinking about in the moment? Was my pod discussing this? Was I thinking about it? Was I learning about it? Was I open-minded to what the implications can be? And look, we're not going to have expertise in most subjects. We're almost never going to have expertise on some of this stuff. So look, don't beat yourself up too much at all, but just say, how could I have been more intentional with that headline and learning about it and reading and more proactive? How can I diversify my pod's expertise? If we weren't talking about this stuff at all, like, why not? So that's kind of what I have to say for that. Obviously, if you connected the dots, that is going to be the biggest opportunity of the year. I mean, if you bought puts, like that was essentially, you're talking epic, mega moves. So then the next day on 1-27, like Nvidia didn't really have anything I was so interested in fading. I mean, vol did blow out. That's where it can be interesting to sell some puts if Nvidia is something you're interested in. But like the main thing is I didn't really see any reason to be long anywhere in this. If anything, I'm again like, this is one of those just thesis busting headlines. The whole move up in the market has been on AI. DeepSeek has the potential to upset that whole thesis. So this is, again, just day one massive news catalyst. Like I do think it's worth considering just shorting some of these roles. Like I don't think this is the craziest short. I don't think this roll is the craziest short. Nothing like I was so in love with overall. But the biggest thing is just not to get run over. Like there's no reason to long and fight any of this. So don't get run over. Reflect the best you can. That's kind of the best I have to say on something like that. But you don't want to just totally overlook it and say, oh, there was no way I could have, understood or acted on that headline. Because that's not true. And look, it was difficult, but we do our best. Okay. Last play that I'm going to discuss for January 2025, and I don't think this was anything so amazing at all, but I do think it's part of a broader point and theme I want to make. So, of course, the market had been moving. I mean, this was the DeepSeek thing, but in general, the market overall had been moving a lot based on Trump tariff headlines. And so what we got into 1-31 was there was a news article saying, okay, the tariffs are going to be postponed a month. And so then what ends up happening on 1-31 is there's a press conference, and I think it was the press secretary that came out and said, hey, I saw that news report that tariffs are going to be delayed in a month. Report is false. As far as I know, tariffs are coming into effect at the start of February, which of course, is pretty much right behind this. It's 1/31. It's just the next day. So that's where it's like, oh shit, Trump is for real. Because a lot of people are like, oh, is Trump bluffing with these tariffs? You obviously never know, which is part of his whole point with all this. And so once the press secretary was like, nope, these tariffs are coming into effect as soon as tomorrow. That report was false, which the market was up on. That's a nice short. And in general, you always want to have your tariff basket optimized. So like, this was relative, I think, to Canada, Mexico, China. Like China tends to move a lot on some of these headlines. Of course, on stuff like this, you're of course going to get the VIX go up, inverse to the market. So you really want to have your basket of what are the most sensitive tickers, what's my best effective use of BP, especially, might I want to go into 0 DTE options and stuff. So I'll let you figure out the basket, because that's kind of where people should be putting in individual work and effort. But being prepared for these tariff headlines is not a bad idea. And if I could summarize anything, like we're 1 month into the Trump presidency. We are so rife with crazy headlines. Like this is so likely to be 4 years of just wild Trump headlines. Like you need to be on top of all that stuff, whether it's Trump coins and Melania coins, whether it's Jensen Huang headlines, DeepSeek headlines, tariff headlines. There's a lot of opportunities in this stuff and being prepared, being in your seat. So that is it for now. I hope you enjoyed the Jan 2025 top ops. Let me know in the comments if any questions, and thank you so much.